Portions of the following program may be pre-recorded.
The following program is sponsored by Max Out Savings Advisors. The views expressed during the broadcast are solely for entertainment purposes and do not necessarily express the views of KNTH, its management, Max Out Savings Advisors, or its sponsors. Max Out Savings Advisors and members of the Max Out Savings team may or may not hold securities mentioned during the show. Plan for your prosperity. Prepare for your retirement. Safeguard your savings. And nurture your investments. This is the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Now, here's your host from Max Out Savings Advisors, Ted Gioka.
Good morning. Welcome to the Max Out Savings Show. I'm Ted Gioka, and we're talking savings, investments, in your retirement here on the Max Out Savings Show, one of Houston's longest running shows, running for almost 19 years now, talking about savings, wealth, building up wealth, and understanding the world today. Our motto and our philosophy is to save aggressively and invest conservatively. That's the key to building up wealth over the long term. Save aggressively and then conservatively invest the money. Many people do it the other way around. They save conservatively with a little money and then aggressively invest it. That rarely works out. The more sure thing, the more positive way is to just put away money in your savings plans, put away 10% minimum. This is minimum, plus a company match, and then conservatively invest the money. Now we had people call up the show and say they're saving 20% and 25% or 30% a year, and lots of people are, a lot of our clients are, but the minimum is 10% plus a 3% match to get you where you need to be. It's called income-based savings, gets to 13%, and that it doesn't make a difference if you're making $30,000 or $300,000. You're going to be able to save up to what your spending habits are and have a comfortable retirement. And in this world today, it's always something new and always something different. With the government spending $1 trillion every 100 days, it doesn't take a rocket scientist like Elon Musk to figure out that you better start saving money just to be on the safe side. So we got the new 2025 coming up, new year. Make sure you're saving enough money. Look, if you haven't come up yet, if you're listening to the show and you're thinking, well, yeah, I need to be saving money. Now's the time to call up your HR person, make the changes at your company, and increase your savings rate. It's the start of the new year. This is a great time for New Year's resolution to kind of get you where you need to be, in your life. And now's the time to make the change on the new year. So if you're not there yet, call your HR person up, make a difference. Wow, the new year's already started out, and here we are. Things have, gotten off to a rocky start this week. The S&P was down almost 2%, and we had the fires in L.A., which we'll be covering later on. We think there's some ramifications for that. And things are moving around. We got a new president coming in. President Trump is coming in here in another week, maybe 10 days. So what are we dealing with here? Now, something interesting. They interviewed. We have a new president coming in. This is the biggest change in administrations in decades. It's we've had changes come in, and there'll be a little to the left, a little to the right. I think this is big changes for a number of reasons that I want to run by here. Is number one, Donald Trump. It came in his first term. He got in there. No one was expecting to win. We expected him to win. We predicted he was going to win. We were probably one of the first people out there that said it on the radio, at least in Houston, and we explained why. And we were right, but so Trump got in there the first time. Well, he wasn't totally prepared, and it's kind of, I think the thing really kind of caught fire. I think Donald Trump just wanted to get some some issues on the table for people to debate and change the country a little bit, and he completely caught fire because he understood what was wrong with the country today and understood what working people were dealing with. I mean, people, for all the Mar-a-Lago and the guilt and the extravagance, Donald Trump basically has been in the construction business. And when you're in that business, you deal with a lot of working people, and in that environment, you learn what their concerns are, and he did. So he came in. He really didn't have the people in place. He made a lot of the Republicans. He listened to a lot of the Republicans, a lot of the Rhino Republicans, the establishment Republicans, and basically they put a bunch of their people in place that were loyal to themselves, not to Donald Trump, because they wanted to keep the policies they had in place going, because they had big backers in place that were profiting billions of dollars off of this stuff. Well, then they turned on Donald Trump. You had Senator McConnell and House Speaker Paul Ryan. They were going to be the adults in the room to sure Trump wasn't going to go off the reservation. And we had generals calling up the Chinese generals and saying, "Look, we'll control Trump and everything." And you're kind of like, "Well, wait a minute. Did you say actually the same general that did this? Did you call him up and explain to them that Joe Biden was senile?" No, they didn't. But that's what we're dealing with. So the agenda was basically co-opted. This time, and this is important to understand, this time Donald Trump is coming in there. He has a different group of people in there. He's got true believers that want to change the system. Look, we're looking at a world, we're looking at the United States, that it is a disaster. Nothing is working in this country. Our spending is out of control. Corruption is spiraling out of control. The Justice Department basically is running around engaged in lawsuits and investigations on their political opponents like they're the Stasi in East Germany or somewhere. Nobody thought this would ever happen in the United States. We're spending $1 trillion every 100 days. The deficit, $2 trillion deficit. If you look at, we've been running 6.5%, 7% in 2020. We're sitting around, we're running some deficits, not bad. All of a sudden, COVID appears, and we by the way, we brought that to you ahead of almost anyone else back in January of 2020, warned you what was coming. But that's another story. Comes up, oh my God, a crisis. We got to shut the country down. The United States, as a percent of GDP, poured more money into the economy than any other developed country in the world. Think about that. And our deficit skyrocketed to they were about 9-10% of GDP, which was extraordinary. We built trillions of dollars in the economy. Well, then we conquered the COVID virus, and then so rather than think, look, there was a problem. Wow, how we spent all this money? Well, look, the economy was shut down. Companies were going bankrupt. People had to eat. We stepped up the government to help out the American people. Well, that ended in 2021. Joe Biden got in there, and his people said, look, hey, wow, we spent all this money. We didn't see hardly any inflation. We can just keep spending that much money. And the government, and what happened is, and then they said, yeah, so they just kept spending it on infrastructure programs, Green New Deal programs. It was called the Reduce Inflation Now bill. It was actually a Green New Deal. It was diversity, equity, inclusion everywhere, environmental things everywhere, CO2, battle on CO2, shutting down oil and gas. There was one stupid thing after that. They kept spending that money, 6-7% of GDP every year. And so here we are right now with the gigantic deficits. Deficits are spiraling out of control. Interest rates are going up. We're going into hyperinflation unless we get this under control. Donald Trump knows this. He's got to make big changes. This is why I say we're going to see big changes. He has to make these big changes. Interest rates are going up. And so he has to get the economy growing, somehow maybe reduce taxes, get federal spending under control, which is completely spiraled out of control, and get the country back on track, so investors in the rest of the world will believe in the United States of America and go, okay, I will invest in your treasuries. Because last year, Treasury Secretary Janet Yellen, she had to refinance $3.5 trillion worth of debt. with additional borrowing and refinances. So she pulled the trick. So she kept most of her debt very short term. The most she had to borrow very short term. She wouldn't put any pressure on interest rates, which means less than a year. Which means all that debt is coming up. Which means $7 trillion has to be refinanced in 2025. Now, to be fair to Janet Yellen, her job was to get President Biden reelected. That's what everyone did. No one gave a damn about the United States of America. It was all about Joe Biden. And they just interviewed Janet Yellen, and she conceded after telling Congress no, that she conceded that all the excess government spending raised inflation. Now, she sat there and lied to the American people and into the Congress her whole term in office, and now when Donald Trump gets in there, all of a sudden the deficit is a huge problem because they want to shut down Donald Trump's agenda. They don't want him to cut taxes. They don't want him to do anything, and they're going to sit there and claim, oh, you can't spend any money. And then he's got to refinance the $7 trillion worth of debt. Now, you have the Federal Reserve, and stick with me here, you've got the Federal Reserve that, look, they're under pressure because the election's coming up in September, the election's in November, they have huge pressure, they completely apolitical. Chairman Powell is a paragon of virtue, and he stood up to Joe Biden, but somehow he cut interest rates 50 basis points on early mid-September. And then they cut them again in November. Okay, well, since that's happened, the 10-year Treasury has gone from 3.6% to 4.7%, and longer-term rates are going up. They're going up for two reasons. Number one, Donald Trump's got to refinance all this debt that Janet Yellen and Joe Biden tossed in his lap like a grenade. And number two, people are realizing that the Fed made a massive policy decision mistake to support Joe Biden in the election by cutting rates when the economy was basically strong. Interest rates unemployment was close to 4%. The economy was running strong. And inflation was 3% or 3.25%, and they're cutting rates in that time frame. And it was a massive mistake. The Fed made a mistake. The bond market is telling us. So here Donald Trump comes in. Interest rates have gone from 3.6%. They're up to they hit almost 4.8% Friday. And so here we are right now. And so Donald Trump is dealing with a disaster. He has to come out with a strong agenda. He's got an incredibly strong cabinet in place. They have to be in order to do it. They have to make big cuts in government spending. They have to make big cuts in what they can do is maybe adjust some entitlements, but they have to also cut some taxes and keep the economy growing again. And they have to get more revenue coming in, hopefully from tariffs or something, because this deficit is out of control. And this is the world again. So Donald Trump doesn't have the luxury of coming in, cutting taxes like he did. Keep in mind, when Donald Trump came in office in 2017, the deficit was 3.5% of GDP. It's now 6%, over 6% of GDP. It's been running over 6% of GDP for 40 years now. This reckless Biden spending is now all coming home to roost, and Donald Trump has to deal with this. So when these rates are going up, it's not because Donald Trump or people are afraid of Donald Trump's agenda or some other BS that the Wall Street Journal and some of these other people are spouting off. It's because people are understanding that spending has spiraled out of control under the Biden administration. This is a disaster, and if we don't get under control very quickly, it's going to spiral into a hyperinflation. And so expect big changes. So in that world, do people really think that the stock market is just going to keep merrily marching up? And I think the answer is clearly no. But the important thing now is President Trump has to get in there with his team, which as we talked about in the show, is the best group of the best cabinet. I would say is a month or so back, I was saying this is the best cabinet since John F. Kennedy. I think it's the best cabinet possibly since Roosevelt came in. It is a very, very strong cabinet, and close to 100. It is a very bright group of people. These people are there to make changes. They're there to reduce government spending with the DOGE Commission. They're there to clean up the Justice Department, which has been weaponized against its political opponents like some banana republic. They're in there to straighten out our food and our drug industries, which have basically taken control and raising the cost of Medicare and other things to spiral out of control. They're getting in there. These people are going to make the changes, but it's going to be rough. It's going to be volatile. If that's what the markets are looking at, that's what Trump is realizing he has to do. He's got to go in there and make these changes and get the confidence of the global world as investors. Otherwise, rates are going to spiral even higher, and we're going to be in trouble. Because keep in mind, we have $36 trillion worth of debt. Now, how do we get through this? We'll talk about that after this quick break right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Gioka is taking your calls now at 713-339-1070. Ted Gioka will return after these messages.
This is Ted Gioka, host of the Max Out Savings Show, one of Houston's most popular financial radio shows, celebrating over a decade on the air in Houston, Texas. With stocks at record high valuations and interest rates near record lows, you need to have your guard up. You need to have a plan to manage risk to your retirement. Do you? At Max Out Savings Advisors, we have a risk-based value investing approach to your retirement. If you would like some help managing your retirement, go to maxoutsavings.com to set up an appointment. That's maxoutsavings.com.
I'm Sam Malone, president of 512 New Media. We're Houston's leading marketing and content creation firm for many reasons. Our assets are exceptional, from video production to web design, strategy, and the ability to say no. Saying no is integral in launching a successful, profitable campaign. For example, take a look at Memorial Day. It's a federal holiday set aside to honor and mourn those in our U.S. military who died while serving our country. I'll say it again, for those who died while serving our country. So how does having a sale work in unison with the reason for the day off? Look, we know people will be at the beach and barbecuing and having parties. We would probably say no to launching a Memorial Day sale. So is there another way to commemorate the day while marketing your brand? Absolutely. And from our experience, the same holds true with Easter Day sales and MLK Day sales and Christmas Day sales. That's why we're different. No cookie cutter, follow the crowd, template marketing. Let's talk. We're 512 New Media. 512 New Media. With better marketing comes better value, creating better results.
We return now to the Max Out Savings Show. Here's Ted Gioka.
Welcome back to the Max Out Savings Show. I'm Ted Gioka, and we'll also want to mention another one of our sponsors, Rangoni Gin. Rangoni Alto Gin, which is a botanical gin out of the Italian Alps. It's a phenomenal product. It's got the best water, the best organic botanicals are mixed up and put together in a phenomenal gin. These people have been making botanical drinks for hundreds of years up in this little town, and they've been able to put this product out there, and it's a phenomenal gin. It really almost tastes more like a fine wine. It's Rangoni Alto Gin. Look for the kingfisher on the label, the kingfisher bird on the label. Now, I think we've got a call from Jerry to 713-339-10. Hello, Jerry.
Hi, Ted. Sure enjoy your show. I was thinking about nibbling on some ETFs during dips, and because of Trump coming in, I was thinking about the following sectors: energy due to drill baby drill, and defense because of our empty weapon shelves, and building materials because of what's going on in L.A. I just want to know your opinion.
That's a good idea. I want to start with the energy. We like energy. A couple thoughts. Energy was actually, I was going to talk about this in a minute. Energy, the market was down about 2% this week. If you look at it, the NASDAQ was down 2.34%. West Texas crude was up 3.5%. I don't think it's as much as the drill baby drill as it's the reduction of the regulations that will help them out. The oil companies don't want to put too much oil on the market because it'll drop the price. As long as it stays around 77, I think they'll be in good shape. And if the rest of the world starts coming back from which is kind of a recession they're in now, it's going to be good for oil and gas. I like the sector. Defense. This is a tricky one. If you look, we have got to spend a bunch of money to get our defense operations going, and so if we just pull up Raytheon's chart, Raytheon jumped up after the election. It's come back down some. We have got to spend a lot of money on defense. The problem we're running into is, and remember, Elon Musk is at that DOGE commission. Elon Musk has built out the satellite system, the Starship. I was talking to someone that kind of really knows this. He thinks they built it out at 1/6 of the cost of what Boeing or NASA could have done. 1/6. And so a lot of these defense companies, the prices for their jets and ships and everything else is twofold. Number one, they're ridiculously expensive, and complex. I'll say three things: ridiculously expensive, they're overly complex, and they take too long to build. We can't sit around and hey, I need some more. If I'm the defense guy, I call, and Trump tells me I can spend every one. I call up the shipbuilding company and say, look, we need 50 new destroyers and an aircraft carrier. They said, oh yes, sir, we'll have that done by 2035. Or I'd like a new fighter built that's more efficient than the one that's going to be more reliable. So we can get that done. We'll have it up to speed by 2033. We'll start production. Maybe it's 20. There's no way we can deal with this ridiculousness of in the defense procurement area. It's too expensive, too complex, and takes too long. So there's going to have to be a massive redo of regulations, a massive redo of things there. So the question is, how do they profit from this or not? And that's kind of up in the air. I would say go with the defense. I like defense because we're dealing with China. The building materials, I think right now you can, a couple things. We're dealing with interest rates have gone over 7% on the 30-year. So I would say no, stay away. But this is such a massive build-out operation in Los Angeles that I think you might have some opportunity there. They're going to be spending enormous amounts of money. The numbers I'm seeing are 10,000 houses, and these aren't 10,000 shacks on Matagorda or somewhere. These are 10,000 $2-3 million homes, custom homes, which require huge amounts of materials. So I would say probably all three of them, yeah. But I would be cautious in here and keep stock powder dry.
Yeah, okay. If I could ask one more, no, let it go. I only have AI exposure through the Qs, and I'm wondering if I should be a little more focused on maybe AI ETF.
Yeah, I would. Look, I think the Qs right now, we're using them as a hedge on the short side right now. I just think they're overvalued. I think the Trump administration is going to be. I think these things are quasi monopolies. They're going to have to be cleaned up. I think they're going to have competition due to privacy issues and other things. I think their products are glitchy there, and I think new stuff. The valuations. I ran some numbers. Give you an example. When I thought that I was trying to figure out, I saw the highest number at the time was $50 billion, which I thought was absurd. It might not be for the fires in Los Angeles. $50 billion. To put that in perspective, that's wiped out some of the highest income homes in the United States concentration, and that's $50 billion. Apple's valuation got close to $4 billion. And that one, so if you run $4 trillion, if you look at it that way, you're talking 20, you're talking 80. You could almost wipe out the whole high-end, wealthy housing stock in the United States of America to create the valuation, and it wouldn't do the same damage as if Apple collapsed. And so the valuations, I think, on the QQQs are extraordinarily high, and the margins on these companies are making are high. I would be away from it. I would try to look for AI. I would look at the software AI companies. That's where it's going to be now. That's where the money is going to be made. It's the software, I think, more so than the chips.
Okay, well, I think it's pretty sure that AI is here to stay, so I just wondered about, a little more focused ETF instead.
I think an AI ETF will have a lot of those software companies in it.
Yeah. Okay. Thank you, Ted. I really appreciate it.
It's what I'm trying to say.
Bye.
So we just hit a couple things on the LA fire.
Father Ted, you got David on the line.
Okay, David, welcome to the Savings Show.
Oh, well, thanks. I was kind of interested in what you were about to say there about the fire. It sounds like used to be that if you invested in an insurance company, that was a pretty nice bet. But I was kind of interested in what you were going to say about it.
Okay. Yeah, I think this is very interesting. I think this is a bigger deal than people realize. As I said, a lot of these are high-end homes. And there's a lot of, I was talking to a friend of mine out in Pasadena. His family, he does a lot, is pretty, in all types of different things in Pasadena. Yeah, and he's not real high-end. He's not in, a $6 million home or whatever, and his mom's nearby. His cousin lost his house. But there's a lot of these high-end homes and they're going to take. They're very expensive, and they take time. Toll Brothers, I drove by a Toll Brothers neighborhood. I think this year they put up maybe 50, 60 homes, or maybe 100 homes in there. But if you're talking about, maybe it's D.R. Horton. But if you're looking at custom homes, they can take a year, 2 years to build or more, and you're talking thousands of, multi-million-dollar homes. And as far as insurance, they got to cover that. They have to cover the property. I saw a tweet from, I think, Bill Ackman talking about the artwork. He said one friend of his, the fires got close to him. The guy had $1 billion worth of art in the house. Now, he's probably got it out of there, but that's what a lot of people did not get it out of there, and so you're not talking about the average home where you've got $100,000 worth of furniture, to be generous in there. Some of these things have got $1 million worth of furnishing. They got $10 million worth of art on the wall. I think this is going to be a big problem for a lot of the insurance companies and going forward. But yeah, that's my answer to that, David.
Oh, sure, yeah. Well, what I was kind of interested in, insurance is relative to the value that people put on things. And, historically, if you look at people investing in gold or whole nations having gold in their treasury and that they print their paper money relative to how much gold they have as a reserve, well, as I understand it, there's some new idea to make cryptocurrency valued. Like when we hear a story that, say, Bitcoin is worth $100,000 a coin, that's not because the Treasury says it is. That's because advertisers say it is. And so this idea, apparently Donald Trump wants to take the gold of America and buy Bitcoin with it, and then he wants to pay off the national debt with Bitcoin. Now, the people that bought Treasury notes for the last 100 years didn't even know what Bitcoin was, and if they're all of a sudden going to be told that they're going to be paid out in Bitcoin as opposed to paid out in some valued currency, that's a whole different story, and that creates a fake value. And I'm just wondering if you've heard of this thing. I think they're calling it a strategic Bitcoin reserve. Have you heard of this latest?
They're trying to buy some Bitcoin to make it like, the gold in Fort Knox. Look, the gold, the thing about gold or even crypto, you don't need it until you need it. And, and typically when it's a nation, it's either when they're in financial trouble or a time of war. And this is what, quite frankly, the thing that's probably kept Russia going was they had low debt and they had big gold reserves. And so between those two things, they were able to make purchases and deal with the war. And so the situation in the United States, they don't have enough Bitcoin to buy it up. I think Bitcoin is here for a while, but the problem is with Bitcoin, if the electricity ever drops off, it becomes worthless. It's not electricity's not going away, but it could go away for as people know in Houston for a week. And if there's ever something issue with the electric grid on an attack or something like that from China, and they're already rummaging through all the electrical and water systems in the country with relative ease, remarkably, but that's another story. Then I think you can have some problems with the Bitcoin. I think Bitcoin's harder for me to do. I like precious metals in here in general. I think they're going higher because I think we live in a very unstable world. And crypto's probably going to profit from that as well.
Well, it's even scarier to me. I work on energy issues, and the more you study about Bitcoin, the more you learn that they have to waste a huge amount of electricity in order to do what's called mining Bitcoin. And the people, nobody has ever been able to explain to me what value there actually is in a Bitcoin. And I'm wondering if the share price of the energy companies is where the trick is. That they're selling all of it.
Look, it is. The energy companies, look, it's not just that, but particularly electricity. It's just Bitcoin, but it's also AI. It's also electric vehicles. All that's we're going to require more energy. If you notice, all the CO2 BS went out the window as soon as we got AI. That's why we like the energy sector.
Yeah, I'm not even sure if like you're saying, the climate scientists went out the window. They didn't go out the window. They just got censored. The burning electricity. I mean. Now, the good question. Okay,
let me expand upon some of this stuff here. Thanks for the call. Yeah, a couple things I want to just hit on here. I think the electricity is one. If you look at the a couple things. I got 2 minutes here. If you look at the market, like I said, it was off 2.2% this week. The Nasdaq was off almost 2%, or over the 2.3%. The S&P was down almost 2%. But if you look at West Texas crude went up 3.5%. If you look at gold, it went up 2.7%. I'm looking at American Electric Power jumped up 1.3% on Friday with the market down huge. And this is the thing. The fact that quite frankly, the fact that the Dow Jones, which is an easy thing to do, was down almost 600 points, and West Texas crude was up big. Gold was up. West Texas crude was up 4%. The gold was up as well. It was up $42. And the U.S. dollar was up 0.44% in one day. This is when the market fell 600 points. So this is a big deal. The market plunged Friday, broke down. Gold went up. West Texas went up. interest rates went up and the dollar went up. That is not a good sign. That's telegraphing there's real issues out there of some type with the economy, with interest rates going up, with the dollar. There's demand for dollars as people are scrambling for dollars right now. Interest rates are going up, and this is a concern. And it's telegraphing that the Fed made a big mistake cutting these rates. And so this is what we're looking at. And so this is why we've been saying these sectors, when you see this market started collapsing, those are the sectors that everyone went to: oil, energy, precious metals, electricity. These things were all up. And so this is something that bears watching. Okay, well, I'm up against a break. We'll be back, and we're going to expand upon some of this because it's the start of the new year. Everything's changing, and we'll be right back right here on the Max Out Savings Show.
If you've got savings and investment questions, Ted Gioka has answers. Call the Max Out Savings Show now at 713-339-1070. We'll be right back.
Hey everybody, Charlie Kirk here. Ted Gioka, the founder of Max Out Savings Advisors, always says, save aggressively and invest conservatively. He specializes in helping people grow their retirement account with as little risks as possible. Ted combines working knowledge with the intuition gained from over 25 years of experience of value investing in the stock and bond markets for retirement accounts. Like you, Ted is deeply conservative in life and in his investment approach. His risk strategy allows him to anticipate market downswings to protect your money. Ted is also the conservative host of the Max Out Savings Show. You can listen to him every Saturday morning at 10 a.m. right here on The Answer. If the idea of saving aggressively and investing conservatively appeals to you, the best way to get to know Ted is to call him. The number is 713-627-0400 or visit maxoutsavings.com. That is maxoutsavings.com. Call Ted right now, 713-627-0400 or visit maxoutsavings.com.
Hi, this is Ted Gioka of the Max Out Savings Show. Our motto and philosophy is to save aggressively and invest conservatively. The world is changing at a faster rate than any time in the last 50 years. The investment world has changed. Have you changed? Inflation will destroy your retirement. It is a different world that requires different strategies and ideas. The era of indexing and investing is over. If you need help, listen to the Max Out Savings Show. Our show airs every Saturday at 10 a.m. and Sunday at 7 a.m. We talk about investments, the world, and where the world is going today, and help you understand it and help you save money and build up wealth. It's the Max Out Savings Show. And if you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. On the website, you can sign up for the free Max Out Savings Report. Our report covers all types of these big issues, the changes in the world, and helps you understand and protect your retirement. So go to the website, maxoutsavings.com.
If you can snap your fingers, you can find this radio station. So the next time you want to listen to us, your smartphone is now your smart radio. We're always on. This is AM 1070, The Answer.
Once again, here's your host for the Max Out Savings Show, Ted Gioka.
Welcome back to the Max Out Savings Show. We're just going over a few things. I want to just touch base on this fire again in Los Angeles. I think this is a big deal. I think it's huge. It's 12,000 structures, a lot of very, very wealthy people there. This is going to put huge pressure on building materials. They're not going to have enough. I mean, the problem is you have 12,000 people wanting to make that structures. Maybe it's 10,000 homes. You have to sit there. You're going to have 10,000 people all wanting homes at the same time, and that's going to be very difficult to build. I think you're going to see people leaving the area. You know, the thing I worry about is Gavin Newsom uses this as an opportunity to build out some of the New World Economic Forum stuff that replace these nice homes in the area with apartment complexes everywhere, and they get everyone living in small little houses, part of the New World Order routine. But I mean, this is just a trap. I was I was above in the Hollywood Hills last month, and I went to someone's house and we're driving up, and these roads are narrow. You're going in there, and it's a narrow little road. It's winding around, and there's houses on right up against you in the road, and the stuff is right up on top of you behind it. And this house, I think it was probably built in the 70s. It wasn't some spectacular. I mean, it was a nice house, don't get me wrong, but it wasn't like Kim Kardashian living there. And it was a lot of wood, and I think it's built in the 70s, so they've gone through years without fires up there. I think they're hopefully okay. But I remember thinking, oh my God, fires would be just horrible up here. And this is just astonishing to me. I was in New Mexico talking to my friend Arminio, and the family, they own the whole mountain, not his family, but all his relatives going back generations. This whole group of them own the whole mountain next to Taos. And they have trails going. I'm like, yeah, I was up on the trails a minute. They're so nice. He goes, yes, it's nice up there. I took Congressman so-and-so up there. They've given us a $500,000 grant, and we're clearing all the brush to prevent fires. And this is in New Mexico. If you go in the South, I remember going through the South back in the 70s and 80s, and there was fire towers everywhere. There's one place we knew, we had a family place, and they had bulldozers went through there every once in a while, cleared a little fire break through the area. In Texas, there was ranch money. There was all these counties had money for clearing brush, and you could apply. One of our clients had a ranch. Actually, they were hit by fire. But the stuff down, they were able to clear out a lot of the stuff to prevent a lot of damage. They came in and cleared it out as part of a grant. And yet here these places are in California, in these mountains, the wealthiest people in the world, and they didn't clear the brush. I mean, in the South they knew it, in New Mexico they knew it, in Texas they knew it. Donald Trump told Gavin Newsom 4 or 5 years ago, you've got to cut this brush. You've got to get it under control. After the last fire, they didn't do anything at all, and now all these poor people's homes are destroyed. This isn't the fire department. There's no way you can deal with this when you let that brush get up there. It's a complete failure of government. Okay, it's a complete failure of governance in California to deal with this issue of clearing the brush. I mean, this is something that any forester knows. Donald Trump told them, and yet here we are. So this is billions of dollars worth of damage. As we just talked about, the artwork alone is billions of dollars. The homes, it's going to take a long time. People can't even find homes. They're snapping up homes to rent. They can't find homes to rent. There's not enough builders out there. Never mind the regulatory. They're going to have to straighten out the regulatory system. If I were President Trump, I would withhold all money except going to individuals for the government until they come up with a complete plan to redo the regulation in California, come up with a brush clearing plan, and basically straighten up this complete disaster that's California. I think if you give them any money, it's going to go. It's throwing money down a rat hole in California. I mean, I think we can help people out, but until California comes up with a plan and delivers it to the President of the United States for approval, nothing should get done beyond that. And because they're going to bill us into the ground and make billions of dollars. The biggest money-making operations in this country are these disasters where people are coming in and billing the U.S. government huge amounts of money that we don't have. I'm all for supporting the people in California. I think we need to do it, but we should not. We need to watch our money because if we're spending $1 trillion every 100 days, if we're not careful, we're going to be in a hyperinflation, which is going to wipe out the wealth of the entire American people in this country. And so I think this is a big deal. It's going to put a lot of pressure on building, on construction, on workers, on materials, and it's going to have long-term ramifications. It's going to probably change real estate prices in many other parts of the country because of this. So this is something we want to watch closely. And like I said, I still think some of that insurance is probably bigger than people think. I'll tell you what, Charles, you got a quick question because I got a lot of stuff to talk about. Charles? Hello?
Hello?
Charles, you there?
Yes. Are you there?
Okay, go ahead. Yeah, you had a question for us?
Yeah, just a quick item, Ted, just to let you know that I heard yesterday that we actually all of us may be paying for the insurance problem out there. The companies that have left California, like State Farm and all the major insurers, that a lot of them are still going to be on the hook because apparently there's some legislation that was passed out there
that basically said even though they leave the state, they still have to honor their past commitments. And so State Farm and a lot of these companies that have left California are still going to end up having to pay a lot of what is out there. So, for people that think that, well, it's a good thing that they left and we're not, guess again. People's homeowners insurance and car insurance are going to end up going up even out here in Texas and across the country because of this. So I just thought I'd let you know that. I heard that late yesterday.
Thanks, Charles. I appreciate it. I'm afraid you're right on that. Thanks for the call, though. Yeah, it's a concern there. And look, and by the way, this isn't an insurance problem. This isn't a firefighter problem. This is a governance problem. This is a lack of clearing. It's a lack of being prepared for the future. Concentrate. As my dad's out the other day, see my mom, and the dad's got his civil defense helmet there from the 1950s or 60s. They used to have civil defense. People took care of the country. They watched out for people. You didn't have all these ridiculous regulations, environmentalists, and people not wanting to do anything in government unless somebody can make a buck off it. It's very sad. Okay, back to the markets. Look, the markets are breaking down here. If you look at the S&P 500, it's not a situation. I think you've got to be much more cautious in here. We've been saying this for a while, and actually, if you look at the S&P 500, really is back almost where it was, 2 or 3 days before the election. And we've been saying, look, you've got to be cautious. Interest rates are going up. The Federal Reserve cut rates in September, and since then, they're up 120 basis points. Longer-term interest rates are up 120 basis points. This is not a good situation. The whole market had a very good year last year. It went up on the whole idea that the Fed was cutting rates and rates were going down. Rates are going up. Okay, we're dealing with big issues. Rates are going up. We have a funding problem. We've got to borrow $7 trillion. This is not a positive. Donald Trump is going to have to come out swinging, and he's got to show responsibility. He knows it. Scott Bessler, this Treasury Secretary, that guy's sharp. He knows what he's doing. He started out with George Soros, like a couple. Druckenmiller, I think, was with him. Actually, now I think about it, so was Jimmy Rogers, who we've had Jimmy Rogers has been on the show a couple times. I've met him and stuff, and he was all. Those guys understand how things work, so they're going to make quick moves. But there's a lot of things happening.
Chuck on the line.
Okay, Chuck, just a second. What we're looking at is, we'll be right with you. So what we're looking at is interest rates are rising. The economy is there's a lot of things happening. This fire in California slow things down. It's going to accelerate the economy, put pressure on rates. I think you have to be cautious. The S&P broke the 50-day 2 days ago. The NASDAQ broke the 50-day. The S&P is right on the 100, barely hanging on. The other indexes are going down. I think you've got to be very cautious. Markets falling, gold's going up, oil's going up, the dollar's going up, and interest rates are going up. That's not a good sign. That's telegraphing some type of big issues out there. So I think you want to continue to be cautious. By the way, we actually picked up a food company, a foreign food company, because it was down so much this week that I felt like you can't buy it at this percent of earnings or cash flow. It's been 6, 7, 8 years. It paid a 4% dividend. We're like, we'll take this. I think it's at 14 times earnings, or I can go buy Walmart, which sells some of the stuff they buy at 37 times earnings. And this was, one of the premier companies in the entire world. And so there are opportunities out there, but I think you do want to be cautious in here. And something is happening to these markets here, and we have to watch it. Tell you what, let's take a call. Welcome to the Max Out Savings Show. Hello? He dropped off?
Yes.
Okay. All right, sorry I missed the call there. But what we've got is this is kind of what we're looking at with this market here. A lot of the momentum stocks really have kind of blown up and had big sell-offs, which is, if you really look at it, the thing that drove the market in 2024 it wasn't falling interest rates. It really wasn't huge surges in earnings. A lot of it was momentum. The biggest part of it was momentum, PE expansion. And these valuations really came up quite a bit. If you look at it, the growth sector typically has 28 times earnings. It was at 32 times earnings, and that's pretty high overall. If you look at the percentage, I mean, the top 10 stocks are 35% of the S&P 500. As we talked about, they're now talking, which, it could be $50 billion from this damage of the fire. It wiped out some of the wealthiest enclaves in the United States of America, thousands, almost 10,000. It wasn't, River Oaks with, 500 houses or whatever. Maybe this is 10,000. Which is enormous. It's $50 billion. We said earlier in the show, Apple has a $4 trillion market cap, which means I can wipe out 80 of those, which basically 80 of those wealthy housing areas in the United States, which quite frankly would take almost all the wealthy housing stock out of the U.S., and it wouldn't equal the valuation of Apple Corporation. I've got one of their new phones, the 16. It's horrible. It drops my voice when I'm talking. I can hear the other person talk. So understand there's a lot of things happening in this market, and I think there's interest rates are going up. President Trump has to show us how he's gonna refinance $7 trillion worth of debt. Janet Yellen last year only had to do $3.5 trillion because she rigged the markets. The bar happening here in the market. I think you want to be cautious because there appears to be some breakdown. Anyway, if you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. Sign up for the free newsletter, or you can request an appointment with me here in Houston, Texas, to show you how we manage money. It's maxoutsavings.com. And you can request an appointment, and I'll sit down with you and show you how we use our value and investing approach. There are opportunities in this market, but there's a lot of risk, so you want to be cautious with higher levels of cash. Short-term. Look, as we said, you can go get 4.3% for 1 year on treasuries right now to be super safe. That's not a bad place to be for part of your funds. Anyway, we'll see you next week right here on the Max Out Savings Show.
This has been the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Join us next Saturday at 10 a.m. for the Max Out Savings Show with Ted Gioka on AM 1070. The Answer.